Welcome, everybody, back here for another sixth panel. My name is Matthew Mickelber. I'm host of the Junior Resource Investing Podcast and Substack. Today's panel is titled Investing at the Ground Floor, the Asymmetric Upside of Early Exploration. No one invests in the junior mining sector to match the index. The whole allure of the sector is its high-risk, high-reward nature and how building a foundation of knowledge can tip the scales in your favor. The ultimate logical conclusion of that line of high-risk, high-reward style of thinking is investing in the early discovery explorer. These are the classic high-risk, high-reward plays where the outcome is almost as binary as it gets in the market. Fortunes can be made in this sector that can only be created by successfully picking pre-discovery plays. Indeed, every world-class mine starts out with that same modest above-ground exploration work and initial drill campaign, and it is the dream of every investor in this space to be able to invest in those companies. But to maximize your odds of success, you need the industry knowledge and expertise to make it happen. Joining us to discuss the potential and the necessities of investing in pre-discovery explorers are Brandon Skanderbeg, CEO of GFG Resources, Jeremy Link, CEO of Kiboko Gold, Ian Bliss, CEO of Northern Shield Resources, and Wes Hansen, CEO of Thunder Gold. Gentlemen, thank you for joining me today. I look forward to our conversation.
Thanks for having us, Matt.
Thanks for having us. Yep.
So yeah, I will try to keep this as organized as we can. I'll try to kind of verbally name you as we go here in terms of who will answer first. With four of you, it'll sometimes maybe be a bit of a dance, but we'll just start nice and simple, right? Introduce yourself and your company and maybe the potential that you are trying to tap into. And Jeremy, let's go to you and then Ian.
Sure, yeah. So I'm Jeremy Link. I'm the president and CEO of Kiboko Gold. Kiboko's Harricana project is about 50 kilometers north of Val-d'Or, Canada's most productive gold mining region. We've taken a project that has a fair bit of historical work on it, exploration, early stage to with a lot of historic drilling. And we've just finished a 70-hole, roughly 11,000 meter verification drill program. Is part of a process of working towards a mineral resource for the project that we anticipate reporting near the end of September.
Okay, thank you. Ian?
Yes, my name is Ian Bliss. I am president and CEO of Northern Shield Resources. Our flagship property is the Root and Cellar project on the Burren Peninsula of Newfoundland. It's being explored for epithermal gold and porphyry copper, specifically an epithermal type of deposit called alkaline driven. These things tend to be highly sought after for their associations with both high grade gold and large tonnage. And significantly too, they're often associated with a lot of tellurium. Tellurium is now a critical metal, and it's one that I think we're going to be hearing a lot more of in the coming months or the coming years. And I say the focus is the gold, but there's also strong indications of porphyry copper on the project. Epithermal gold and porphyry copper are really end members of the same system, and it looks like we've got one telescoped onto the other. This is really a brand new project discovered by a prospector about 10 years ago, but Northern Shield was the very first company to be conducting methodical exploration on this project site. So it is really a totally greenfield discovery.
Exciting stuff. And then on to you, Brian.
Very nice to meet you all. My name is Brian Skanderbeg. I'm the CEO of GFG Resources. We're a Timmins-focused exploration company. I think most of you will know the belt, very highly endowed land position, lots of infrastructure, and GFG holds about 800 square kilometers of tenements both east and west of Timmins. And our core focus is really at Montclair right now, which is an advanced deposit. We've drilled about 15,000 meters over the last 2 years on it, and then we have a pipeline of targets beneath the Montclair deposit in Timmins, where we're currently moving those through advancement and initial test of drilling as well. So core focus is in the Timmins area. Our head office is Saskatoon based. We also have a project down in the US called Rattlesnake Hills, and it's currently in a partnership with a private company called Group 11 Technology at present. Yeah, that's a summary of GFG Resources.
Excellent. And you take it home, Wes?
Hi, I'm Wes Hansen. I'm president and CEO of Thunder Gold. Thunder Gold has a gold property just 50 kilometers to the west of Thunder Bay, Ontario, hence the company named after the proximity to Thunder Bay. It's an alkalic gold-related system, quite large. It's been explored since the 1980s. We basically acquired our interest in the property in 2020. We've drilled about 20,000 meters so far. The signature is basically broad, low-grade gold mineralization in association with tellurium. So I think we've got some commonality with Ian and his project in Newfoundland, which is really cool, to be honest.
No, thank you, gentlemen. So I think maybe just because, I mean, this is all about potential, right? And unrealized potential and the what ifs. And maybe this is somewhat inspired. I know that the ASX requires exploration targets, saying from the early stage explorers. I'm not sure if that's something that we see up here as much, but maybe just as a kind of from that style of conversation, gentlemen, maybe do you want to just discuss a favorite discovery of yours, or maybe a discovery that you kind of have as on your dartboard as a target for what you think you might have on your hands? And we'll go Ian, Brian, Wes, Jeremy for this one. How about? So yeah, Ian.
Well, I'm actually gonna pick one that's not Northern Shield. But Northern Shield was originally a nickel copper PG explorer, and years ago I was looking to add a project to our portfolio. And I was looking around Western Australia, which is known for its nickel copper PGE, but no one was exploring on the Western Needlegarn block. And I came across a target that I was sure was nickel copper PGEs, a mafic layered intrusion. And for whatever reason, I didn't follow through with it. But of course, a few years later, Chalice Gold put a drill hole in there, and they're now about a $2 billion market cap with a spectacular nickel copper PGE project there right outside of Perth, Australia. And if anything that did, it made me, when you have an idea, try to see it through unless there's good reason not to see it through. As an early stage explorer, push forward with some of these. And that's how we ended up with the Root and Cellar project. It was diversifying out of nickel copper PGEs. We recognized quite a unique opportunity in the Burn Peninsula. And so far it's panning out pretty much as we foresaw.
Thank you. And Brian?
Yeah, look, obviously we all have our own personal biases within the companies we run, but I'll go back to a previous life of mine when I was running with Claude Resources, and we made a very nice discovery called Santoy Gap. And, I think the uniqueness of that discovery was that it was returning to a target. And, we drilled this target 2 or 3 times and kept on looking at it, reviewing it and the context of it, and it was always remained attractive and on top of our pipeline. But until we really chose to test it at a different elevation and think about the target differently, we kept on finding kind of mediocre results. And eventually we got there, and this would be kind of 10 years after the first target was drilled the first time, and we returned a drill intercept that was 20 over 20. And but prior to that, it had kind of a hit rate of 10%, 15% on 20 or 30 holes into this corridor. And so to me, I look at that and I'm like, it showed a lot about the system. It showed a lot about the team sticking to it. And in the end, that discovery unlocked an immense amount of value because it was made in proximity to relevant infrastructure, namely our mill, which was 15 kilometers away. So I think when even with GFG, we think about how we're approaching our business and are we seeing the right signs in the system? How can we rethink a target that might have returned mediocre results and think about it differently and really drive discovery through that? So that's one of my reminders to the team, is to always, in some ways, exploration is about gut too, and as you're in this business for a long time, if you're a seasoned technical individual, you have a feeling about targets, and sometimes you just have to go back with that gut and test another target and think about it differently. So I would go back to Santoy Gap, and that mine's currently producing about 120,000 ounces a year for SSR mining.
Excellent. Wes?
I tend to favor the project that I'm currently working on, and I think that Tower Mountain, which is Thunder Gold's primary asset outside of Thunder Bay, I love it. It's unique. It's something I haven't come across before in my career. It's there's no real. We haven't unlocked the mysteries of what's controlling the gold mineralization there yet, and that's really the challenge that geologists are tasked with doing, is trying to assemble well, why is the gold occurring where it occurs, and stitching that together into a mineral resource estimate. Tower Mountain has it has the potential to be a major gold deposit, probably a large tonnage, low grade clone. Similar. What we're looking for is something like the next Detour Lake, as an example, and that's that's a big hairy ass objective, but that's what we're trying to do here. It's build something big and drill it off and make our shareholders money.
Excellent. Well, you know what? On that note, Wes, in terms of making your shareholders money, this concept of there are better and worse ways, maybe not right or wrong, but better or worse ways with some wiggle room for personal preference about what does it look like when things are going right, or what are telltale signs about companies that are doing things the right way versus the wrong way. And so I thought maybe having executives such as yourselves on. You providing some color in terms of what does it look like that's right, what does it look like that's wrong, that you might provide for advice to our listeners here today. Brian, Wes, and then Jeremy and Ian, maybe do you want to try out that question?
Sure. You want me to go first?
Yeah.
Look, I think when you're at the early stages of discovery, whether you've drilled a proper hole yet or not, you're seeing increased interest in the company. I think listening to management speak towards their mindset of a discovery is really relevant. And if you see a management, you see Wes, you see Jeremy or myself talking about our companies, and you see true excitement, and you see the passion that you see in the individual, I think that's such a positive sign. Often that'll translate to things that you can see in the technical trading of a company, whether it's volumes or share price moves, or these technical drivers looking at a share price behavior. I always look at things like shareholder participation. So a company goes out here to raise money, and you see key shareholders, smart shareholders, increasing their position in the company. Those are all really good signs that things are going in the right direction. And I'll leave it at that for now.
Sure.
I think from my perspective, it's just good systematic mineral exploration. Like you have a plan, you communicate your plan to the market, you go out and you deliver your plan, and hopefully for all of us here that the results sort of demonstrate the plan that you're putting forth, and the exploration model that you're exploring for is valid, and that gets you over the line. I mean, you can't beat good science in this business. Wes,
you're bang on. Like, it's really important that the company have a plan and that they keep advancing that plan, because every time in our projects, when we lay out a plan, we go from one step to the next. At each step, we have an honest discussion. Do we want to continue? Our time is valuable, our shareholders' capital is valuable, and so we've got to make certain that we're following our plan. And then as we move it along, that it's heading in the right direction, and that we stop and ask ourselves whether we should continue, or do we need to even take a different direction, or stop completely. And so I think it's really important that you see someone moving through their work plans. And then going back to Brian's comment about trading activity, I think when things are going right, when a stock moves up on high volume. Low volume moves up and down don't really mean anything, particularly in exploration companies. But once you have large volume come in, then you've got significant investor interest, and that people have taken a strong view on the results of the company.
Yes, and I'll just echo all the previous speakers on that. I think the critical thing is to have a geological model, an understanding geological model, and that model may adapt with time. I mean, very rarely the things pan out exactly how we first set out. So that model will adapt, but you need a model. You need methodical exploration to follow that, and there's going to be hiccups along the way, but you want to be seen moving that ball forward, even incrementally. All the way, unless, as Jeremy said, sometimes results suddenly come out and it's like, okay, that's not worth moving the ball forward. And this goes back to one of the other questions on risk for early stage project. If the data is not supporting further work, then don't push that risk on any further. Maybe it is time to walk away. But you want to be seeing the ball generally moving forward on these incrementally under a methodical exploration plan. And understand that a geological model, and if management understands that, it's easy to talk about a project, and you can see it and hear it in their tone. And so if management's telling the story, I think that's a good sign too, that there's a methodical plan and model in place.
No, excellent, guys. I think that you discussed, good science and the need for a working geological model or research-based data-based exploration thesis. I think that will probably resonate with a lot of people, right? And so I guess the question I have for you, all four of you have. I think a couple of you have a couple of greenfield plays in hand, but a lot of you have historical data here, right? Historical exploration that you can rely on. I guess maybe a question I have around that then, right? We're going back to pre-43-101, even sometimes stretching back to the 90s or earlier. How much does historical exploration and data play in your decision making? And then I guess maybe questions I have also around that is, like, how do you know if it's trustworthy? And then how does that help inform where you're working from? And how, I guess in general, then at the end of it, how big of an advantage does having that kind of suite of historical information to work from provide? And we'll start with Wes, and we'll go Jeremy, Ian, and Brian.
Well, this 43-101 wasn't a magic event that all of a sudden forced geologists, to be honest, to do good work. It's like there's some fairly successful mines around the world that were discovered before 43-101 came around. Not all of you have this impression that all of these previous operators were all similar to the Bre-X crowd, but that's exactly not true, where the Canadian Mining Hall of Fame is filled with those people. So, I think, again, it's companies like NRN.V and Inco, they knew how to run exploration programs and how to collect data and how to make sure that the data was properly transcribed. I think it's an invaluable tool in terms of evaluating mineral deposits and opportunities. I think that often in a lot of cases it includes diamond drill data, which is probably the best sample you can get in terms of the subsurface. So we're in a 43-101 world now where we are kind of required, in order to use that data for a mineral resource estimate, we have to confirm it, and that's a reasonably easy thing to do. You can twin some holes, you can collect some additional infill sections in between previously drilled sections, and you just basically build the scientific case that this historical data is good. And bingo bongo, some of us are inheriting $40 million worth of exploration work for, a couple of $1 million of drilling, and that's a huge benefit to have.
Jeremy?
Yeah, I agree with everything Wes has to say. Like 43-101, and starting with that, we do verification work at our project, and we've got pre-43-101 data and post-43-101 data. There's problems. 43-101 doesn't solve anything. There are legitimate problems that we see, QA/QC issues in the current data in that data set, and so with historical data, it's incredibly valuable. And our view kind of is that we got to trust, but we got to verify and validate it. And that's not just looking at assay data. The biggest thing we find when we look at projects is that people just say, well, here's a spreadsheet with a bunch of data in it. And everyone just assumes that the collar locations are accurate for some reason. And we went out of the field and we found out that holes were often nowhere near where people said they were in the data set. And so, but the historical data set allows you, particularly once you have drilling, to really have a quantum leap in your modeling efforts. You can plot up all the assay data that shows you your structural geology. There's very few exceptions to where structural geology doesn't control where your mineralization went. And so it's just a huge advantage when you're going into planning your exploration program, not just going back for verification though, but also for greenfield exploration, and they're on the peripheral of the heart of your project.
Excellent. On to you, Ian.
Yes, well, Northern Shield is more involved in sort of generating our own projects, so we don't have a lot of historical data as far as other previous companies' work. We do have a little bit. But on the same note, a lot of this government-generated data, these soil samples, soil surveys, geophysics, this is essentially historical data too. And, it's free information, essentially, so it's incredibly valuable. You can go and put your own interpretation on it. Some of this data was collected or written up years ago, so science and interpretation has changed, but it's incredibly valuable to have even the small amounts of data, like some of this government data out there. That's how we generate our projects. And as Jeremy said, sometimes data from decades ago is misplotted, and so there's opportunities there. But one thing, some of the older data is they were really good. Geologists, 30, 40 years ago, were really good at describing what they saw. They may have mislabeled the rock, but they were really good at describing what they saw. So you can often go back and read those reports and get information from simply reading these descriptions and looking at them in a different context. So all this historical data, whether it's government-generated data or other mining companies, is really the first place to go for, whether you're going on a historical property or generating a brand new project.
Interesting. Thank you, Ian. And Brian, final thoughts on this one?
Yeah, I would say I always do my best to try to put myself in the position of the historical explorer. And you might read a report, you might look at data, you might have a spreadsheet, as my peers have talked about. But most of my experience tells me that data is pretty solid quality. And yeah, there might be color errors from back in the day, and there might be color errors in the work that we do right now even. And there's challenges in the integrity of data that's being generated today. But do my best to put myself in those shoes. Often there's some really intelligent individuals that have put some thought in. If there's something that's off in the data, there's usually a reason for it. And there's usually a rationale and a thought set and something that can be learned from that. Drilling a deposit a different way than you're thinking it should be drilled. Well, they probably knew as much or a lot of what you know right now and had a reason to drill it a certain way. So try to understand why they did what they did and use that to the best of your knowledge going forward.
Interesting. No, thank you, gentlemen. So I'm going to ask you a two-part question here now, and I'll ask you, can I put on your caps as private investors in this sector, right? So a two-part question here. Part one is, what do you look for? What are the essentials that, if you are looking at an early exploration project that you want to put some money into, what are some things that you look for? And then part two, I'll give you a chance here to discuss your own companies. What's the checklist that, of those critical elements of a successful early explorer, what aspects do you want to highlight for our audience here today? And then I'll start with you, Jeremy, and we'll work from Ian to Brian to Wes.
Okay. Well, I've been investing over 20 years in junior exploration, probably way more than I should be. And the lesson I have learned painfully and also joyously is that you invest in people. Good people find good projects and can advance them. It really comes down to that skill set. And that person doesn't need to have like a series of discoveries, have found millions of ounces, in their prior job. They need to just have the skill set to advance the project forward, have a solid plan, and a good geological argument for making that exploration. And so to turn that for like Kiboko, our most valuable asset is our people. We explore for moderate grade coarse gold. So not low grade, not high grade, somewhere in between. And if you've never worked in those types of systems before, they're confusing, and arguably a better word is frustrating to work in. And so by having that expertise, you don't fall for the same, like I would call it, rookie mistakes, or you don't get disappointed with the data when things don't turn out the way you hope they would, or maybe you don't get overly excited because you understand you have this significant nugget effect in your project. And that's a key aspect for Kiboko and its Harricana project, as we're advancing what we see as a fine coarse gold project.
Excellent. And Ian?
Yeah, I'll concur with that. I guess it often, and you hear this from investors, it comes down to management, understanding the model, taking an honest approach to it. I mean, I think we all like to tell our story, but there's often a fine line between telling that story and sort of over promoting, which is really days in the past. But I think it's taking just an honest approach to it, understanding the geological model and communicating it, and shareholders begin to understand that a lot more. I know, obviously as geoscientists, there's a lot of geospeak out there, but investors are doing their homework nowadays too, and they're understanding the stories in the geological model. And as long as you show enthusiasm and you're telling the story honestly, I think that's what investors should be looking for.
Excellent. On to you, Brian.
Yeah, look, I'm always looking for context to the data. So I might look at a press release for GFG, or I might look at a press release for Brian Skanderbeg from an investor standpoint, and it might be soil results, it might be drill results, but you might have a splashy grade, but it's really about how do you interpret that data in the context locally. And I'll give it a good example. You may have a massive soil anomaly, and it may be on a slope down a ridge, and it might be 1 kilometer by 500 meters, and it's a singular point source, and it doesn't have scale. So trying to look at the location of the data and the context of that data is relevant for me, whether it's a chip result, whether it's a soil result, whether it's a drill result. The other thing I would say to really focus on that I look at is this concept of just jurisdictional endowment. What do you have in the belt as relevant examples? Because these belts and deposits and mines that we're looking for as explorers, they occur and they share similarities. And in a given belt like Timmins or Val-d'Or or Kirkland Lake, there's characteristics of the systems that are all shared. So I really look at this concept of what does the belt yield in terms of systems, and the scale of those systems, and the character in terms of grade, mineability, and value. And inherently, that's what drives part of the GFG decision making. When we think of a district like Timmins, like it has literally dozens of deposits, 5 million ounce plus. And that is a unique character of the systems that are at work there. So if I'm looking at a piece of data or a piece of drill hole, that's what I try to look at, is local context and jurisdictional context.
Wes, final thoughts?
Look, you guys all stole exactly what I was going to say, so we'll just move on to the next part of the question.
So maybe I might circle back here again and ask you, gentlemen, you're giving me lots of positive examples. Could you maybe give me some red flags or yellow flags in terms of early explorers that you would maybe, it would maybe raise your hackles a bit, or make you ask some questions about what's going on? And maybe Ian, we'll start with you, then Brian, Wes, and Jeremy.
Well, I think Brian sort of touched on it previously. It's the lack of information or incongruent information, a lack of context. I saw a press release just the other day with great numbers, but you try to find some context on it, and it was absolutely impossible. So you give out results, but there needs to be some context to the information. And if there's not, then it's pretty much a red flag right away when you can't even find a map of the occurrence or the soil anomaly or the grab sample. So yeah, any lack or incongruent information is definitely a red flag.
Excellent. Brian, do you feel you already answered that one? Or do you have more color to add?
Yeah, I mean, to me, I always we try to get news out, release, and communicate with our shareholders. So certain things that are flags are unusually delayed results. Look, we can all have problems in a lab, but often, somebody maybe not wanting to talk about results that are very mediocre, language that's around pursuing other strategic opportunities is an obvious one. And even of GFG, I mean, I'll own our own path. We've pivoted, we've changed from one asset to another in time. But I think that's also proper risk mitigation in your portfolio. So you might have an asset that's not trending where you want, and you might make a decision. We need a strategic shift. We need to look at strategic alternatives. Sometimes those are really good drivers. You've got a new company that's looking elsewhere, they're being transparent about it, and let's not be afraid to change path if it's not working appropriately. So there might be flags there. I think it's as much about how management chooses to respond or communicate those strategic changes.
Thank you, Brian. Wes?
Well, I mean, Ian and Brian both hit the nail on the head. There has to be some context to the results that are being released, and you know, some images and maps and sections that sort of describe what the results mean to the investor. And you know, investors have to do their own due diligence as well. I mean, it's not you know, if you're buying stock simply on the basis of a flashy drill result, you're going to be disappointed. I tend to avoid the smoke and high grade results if I can, simply until they demonstrate some continuity of those results and stitch them together. And I think there's enough good stories out there in the exploration world today that demonstrate the importance of that and the success of that. But you know, like just know. You know, try to educate yourself on the district where the company is working. Make sure that the neighboring properties are demonstrating similar results of similar tenor. And you know, if you're the oddball in a camp, you know, if you've got screaming high grades in a camp that's known for large grade or large tonnage, low grade deposits, you might want to take a closer look at it and gain a better understanding.
Jeremy, final thoughts?
Well, you know, I think context is important. I do see a lot of bullshit out there. It's crazy how many people, like, there's just press releases full of geobabble. I call it geobabble after geobabble. It's early stage. Maybe you can't put it into context, or in some instances, maybe that it's so complex and you're companies don't have the time to really try to put it into a much larger context for the investor. There is a lot of pressure to get drill results out as they come in, both from your investors, but also from the securities commissions. And so when you think there's a lack of context, I would encourage investors to contact the company, ask more. I think everyone here on this panel, our press release ends with more information, please contact the company. And then whether it's the CEO or someone else from the team will walk you through the sections that are there, the maps and everything else to help you provide that context. And I think what Brian mentioned something about like lab issues. Kiboko had lab issues in the last year, and those are genuine reasons to hold back drill results. And so you do need, once again, talk to the company, come up with your own opinion to determine whether or not is this an excuse or is it a reason. And if you sense that it's an excuse, that's probably a red flag for you.
Excellent. Thank you, guys. So I'm going to turn here and discuss just jurisdiction and its impact on this. I'm going to guess based on where all your flagship projects are that all of you probably have some opinions on the importance of jurisdiction. But I guess my question is this, how jurisdictionally agnostic are you guys? When it comes to early exploration, pre-discovery exploration, are you, and I guess this is coming down to like the actual selection process of an actual individual land claim. Were you looking in tier 1 jurisdictions specifically and intentionally? Are you more agnostic, where you'd be willing to just chase good juicy land claim regardless of where it is? Or how much does that factor in, I suppose? Brian, I'll start with you, then Wes, Jeremy, Ian.
Absolutely critical. We're all in a competition for creating value for our shareholders and competition for assets. So when I think about a jurisdiction, I want to look at our team and say our team can compete and win in this jurisdiction, and we have the technical capacity to lead and to make discoveries here. Discovery is inherently exceptionally high risk, and you need the best team, and that team most often has jurisdictional weighting in their capacity. So looking at your geologists, looking at your teams and saying, are we the one of the strong teams working in the Abitibi in terms of our philosophy? And so that's one side of it, absolutely critical from a capacity potential. But jurisdiction to me is also on the second side of it is like, it's the endowment, it's the infrastructure, it's the exit path. And I'm always really keen on looking at who are the natural buyers of an asset. If we have an asset that's discovered in Central Nunavut, it needs to float its whole entire infrastructure. If you can make a discovery in Timmins of 1 million ounces, the filter is much, much smaller to reach something that's an economic threshold. So jurisdiction is, to me, the top of the pyramid of what we should be looking at to improve our odds of success.
Well said, Brian. And Wes?
Brian, again, I couldn't agree more. Look, there's a reason why Canada and the United States are at the top of the Fraser Institute preferred locations for mining investment. They're just good, safe places to work. There's surety of title. There's lots of access and infrastructure in place. There's trained workforce that's available to you. People like it here. It's a safe place to go to work. I've worked internationally. I've been in places perhaps that I had no right to ever go to, but lots of good stories came out of that, and saw lots of good geology. But I have zero interest in going back. And in some cases, those great assets, and they were spectacular assets, were simply stolen by the government or awarded by the government of the day from the Canadian company that invested time and money and effort to unlock the mysteries of the deposit. And then the government turned around and made sure that that deposit ended up in the hands of a party slightly more favorably disposed to the government of the day than the Canadian company was. So, I think Canada is a great place to be. I agree with Brian 100%. Like a million ounces at the end of the road in any province in Canada isn't as valuable as a million ounces beside a highway 50 kilometers away from infrastructure. It's just common sense. Or 50 kilometers away from a major mining center like Timmins or Val-d'Or or all these areas. So you just gotta, there's benefits. Jurisdiction has to come into play in your decision making, and I just wouldn't work anywhere outside of Canada or the US. It's that simple.
Yeah. Well, as someone who too, I like to swing at the fences when in my personal portfolio, and jurisdiction doesn't really come into play when I'm looking at things that are pre-discovery or early discovery. We're not building a mine in the next 10 years. There's something new that's been discovered. It's exciting. It's going to take time for it to, define, what's there. And if someone came to me and said, I have, another world-class deposit like lookalike, I think based upon whether it's geophysics, geochem, or some historical drilling and whatnot, and they wanted to go for it, take my money, right? It's early. If it's going to have a chance, if it pops, it will have good results. It will pop, it will go, and it'll take years to work through the jurisdictional thing. That being said, I don't really want to work in those jurisdictions myself, but I got no problem investing in them as long as it's a good case. Like for pre-discovery stuff or early stage, it's cheesy, but like you're elephant hunting. No one's bringing you for like these questionable jurisdictions to go find something that's mediocre. Everyone's got a picture of a big project, and that's because that's what it needs to be in order to work through those jurisdictional hurdles.
Ian?
Yeah, I guess there's two aspects to jurisdictions. There's, the political economic point of view, and then the endowment and the geology. Early stage exploration, from my point of view, is risky enough. So if you can avoid, political and economic uncertainty, then why not reduce that risk? On the sort of economic geology side, you want to be working in a jurisdiction that has some indication to support your model that it is, well endowed with your mineralization and fits your model. In the past, I say we were a grassroots exploration company. We didn't mind going to, further corners of the world, or at least Canada. We'd worked a lot in the north, and with that, we felt that was, it fitted our model because, as Jeremy said, we were swinging for the fences. We felt if we go a little bit further afield, there's a chance you'll find something on surface that's nobody's found in the past, but with that comes logistic challenge, particularly helicopters or long distance of travel, and then the infrastructure to get it out. And so the past few years, we've sort of changed our philosophy a little bit and look for jurisdictions that still meet our sort of, due diligence requirement of being underexplored, but being relatively accessible and good infrastructure. And that's one of the reasons we ended up in the Burden Peninsula of Newfoundland, vastly underexplored, but deep water ports, a welcoming population and infrastructure in place, and potential for large-scale deposits.
Thank you, gentlemen. So I'm going to switch gears here, and I want to discuss the outsized impact that the macro market conditions can have on especially microcap explorers. Right? Always frustrating. I'm speaking from experience as an investor. So frustrating to see good projects suffer in bad markets. And I mean, obviously, this can be markets, but also a few years back with the huge delays in labs, right, from assays, and that way that can cripple kind of your turnaround time and your responsiveness as a company. So I guess my question is, how do market conditions impact your decision-making process as executives of microcap explorers? But then also, how do you shield your company from the worst impacts of those as well, if that makes sense? And we'll go Wes, Jeremy, Ian, Brian for this one.
Well, the markets are always a big part of the equation, and raising capital. I mean, the bitter reality of life is, what's the average discovery cost in the world today? It's like over $25 an ounce. Some explorers are below that, some are above that. This is an expensive business, and for junior microcaps, you can't afford to miss. It's really that simple. You gotta deliver the goods day after day after day, because a lot of the investors aren't like old investors used to be. There's not buy and hold. There's not a large buy and hold population out there. They're looking for a quick turnaround and a quick appreciation of their investment in capital. Sometimes that's 3 months, sometimes that's a year. So if it's not there, they're going to get out of your stock on any sort of bad news that you happen to release. On top of that, a lot of Canadian companies have the benefit and the anchor of using flow-through funds to fund their exploration projects, and quite often the flow-through funds are not long-term holders of your stock either. I mean, they have their mandate. So again, if your results are disappointing, or if there's a downturn in the market that your high-risk capital disappears, then you're going to be left basically with a declining share price and some challenges. I can vouch for that 100%. So, nobody's in the Mining Hall of Fame only because they were brilliant. A lot of them also were blessed with an impeccable sense of timing in terms of when they found their discovery and how they advanced it, and the market conditions at the time, and their shareholder base. And that's the challenge we face. That's what you sign up for when you sign on the dotted line to be the CEO of a junior miner. I'm not doing it for the adulation.
Oh no.
I'll work on that, Wes. Sorry, I'll work on that for you. Jeremy, do you want to take it off from there?
Yeah, sure. No, Kiboko went public about a year ago. It was, horrible markets. Not that, I can remember a time when there's actually been good markets for a while, but what we found from that process, good projects with good teams, there's money available, regardless of market conditions. It may not be as much capital as you want or you think you need, and so you have to be able to pivot to working on that. For us at Kiboko, we always plan big programs. We've worked at major companies where capital was, readily available, and that's the mentality that we kind of think about. And then we pare back, what can we get done with the budget that we can afford? So it either has to be a big program, because not every hole is gonna hit. Like, you could do a 4-hole program, all 4 holes missed, but originally you planned 12, and guess what? The 8 other are the ones that hit. It's kind of like that anecdote. And or we look at budgets in which was high impact. Like, we've got a project called Mon Pass, 2 kilometers south of our main Fontana area of our project. We only need to put in 2 holes to verify 8,000 meters of historical drilling. That's a small, nice, good program. But the market conditions, ultimately they do decide everything, because once it's the shareholders who decide what the use of proceeds are ultimately going to be. and so you're at the mercy of the market. But I always believe that there is money available for good projects that have good teams.
Excellent. And Ian?
Yes, as Jeremy said, we're all at the mercy of the markets, more so in this industry than perhaps anywhere else. But you need to find a way of still moving these projects forward, and sometimes it's tough. And getting it right, there's money out there for good projects, but in these market conditions, the earlier stage your project is, again, exponentially it's harder to get access to capital. So you look at other alternatives, either perhaps partnering up, with another money company to do the work, or in our case, just downsizing your exploration program, but trying to still do meaningful work, to move that ball forward and make progress. So when the markets turn around, you're in a good position now to suddenly sort of surge ahead. And the flip side of that is, I've been talking to a number of service providers on the island of Newfoundland recently, and they said, yeah, other than one or two companies, things are really, really quiet now. Everybody's sort of hunkering down. They think bad times are coming. And so I was deciding, hey, do I hunker down too, or do I go ahead with a drill program? In the end, we decided, no, if everybody else is hunkering down, or most people are hunkering down, then I'll go ahead with the drill program. With the idea that if there's, that good news, hopefully we get that good news, is now, it's in a smaller market. There's not a lot of news coming out, and we can get that focus on us. Then there's an upside to these quiet markets as well.
Awesome. Thank you. And Brian?
Yeah, look, I always just think of capital availability as it's a cycle we all work in. To me, running GFG, there's a base level activity we need to do no matter what the market is. And that's just keeping momentum to the company. Two drivers will take us to an increased level. One of them is relevant discovery, and the other one is a good, robust capital availability market. So from that perspective, we obviously cycle our budgets, and those budgets are driven by internally a number of factors like our success and our feeling towards targets, and externally is really how robust and available is capital. So that's all I'd say about it.
Okay, no, excellent. So I'm going to ask us to look to the future a bit here. Just a couple of questions left. We're kind of nicely wrapping up the hour here. Obviously, AI and the world that we're in is rapidly evolving in all aspects, I guess. How do you see the future of pre-discovery or early discovery, or just how do you see the future of mineral exploration evolving? What technology are you using individually that you would like to tout maybe as something you think is exciting, or what technology do you see emerging that you think holds high impact potential in terms of its influence on the industry? And oh gosh, where were we at? Brian, do you want to lead us off?
Yeah, look, this concept of AI and the evolution of it, I was just talking about yesterday. And if you used AI as a terminology 10 years ago versus where we are now, it's probably 100-fold. And then you think of where we are 10 years from now, and it's probably another 10-fold or 100-fold impact to our business. So this is a huge impact. I do believe it will still is on the steep part of its curve, obviously. So I think there'll be a few impacts. Those leaders of the technology and application of AI will have a higher ability to compete. And, in my perspective of those, there are certain individuals and teams that prioritize that. Some of those are the mid-tiers and majors. So I'm always cognizant to build the relationships at those levels and see how a group like Newmont or a group like Newcrest was applying AI in their philosophy. I do think it will change our business immensely. Will it ever replace a geologist looking at rock? No, but it'll just give them another tool to use and a tool to be more effective. And, the days of prospector discoveries are largely gone from our business. Some jurisdictions, they're still available, but it's data interrogation. It's using the legacy data to look differently, to look deeper. And that's ultimately where AI can be applied best. So it will change our business, and it's still at a very early stage in this application.
Yeah, well said, Brian. Wes, AI or otherwise?
Well, I think there's a tremendous amount. Look, the mineral exploration industry is the only industry that's probably a slower adopter of technology than the mining industry, who is absolutely the slowest adopter of technology. I mean, after years and years and years of effort and forethought, and basically we ended up with a bigger truck. There's all kinds of things that can be, that can reduce the bottom line operating cost of a day-to-day gold mine or copper mine. It's just, there's a refusal to embrace a lot of new technology because of the risk associated with it. I don't think exploration is any different. For a junior to see the benefits of artificial intelligence, it's going to be tough because you're diverting the money that you raise from drilling a drill hole, which is, at the end of the day, the best thing an explorer can do is drill holes. You're diverting that capital away from drilling a hole to put it towards a evaluation tool that may or may not yield results. And I love technology. I personally, I think it's the way we got to go as an industry. I absolutely believe 100%. I'll disagree with Brian. It's not often I do this, but I'm going to do it here. I think AI is absolutely going to replace geologists probably in the next 10 to 15 years, simply because there's no geologists out there anymore. Like the number that we're graduating is like lower and lower every year. They don't have a great deal of practical experience. They don't want to go out and work on some of our projects because they're not downtown Toronto or downtown Vancouver. So, we have to adjust as an industry. And I think there's a lot of scanning technologies and photography techniques and tools and constant read XREF analysis tools that can just collect data and make the interpretation of that data faster and probably more accurate than a geologist could do it. Now, all of this has to be supervised by a geologist, and preferably a geologist that has the experience to be able to discern when the technology is taking you down the wrong path and bring it back. But it's just, we're going into a Star Trek world, man. I mean, we've all got communicators now that we carry around in our hands and make instant calls, and we have space-based exploration tools that we deploy. And I mean, technology is where it's at. I think it's an exciting future, and it has a lot of potential benefit, especially to projects that are challenged in understanding the geology.
Well said, Jeremy.
I think that AI will be a great tool for generative exploration, but I don't think it belongs in the micro cap companies. You think drilling's capital intensive, so are these AI projects. And really, I think there's one comment here. Someone made a comment here of they don't carry hammers. That's true. You still need people to go into the field. We do all kinds of desktop work to evaluate projects, but we still go to the field to see it, to confirm it, and whatnot. And so I just think AI will be a great generative tool. Filtering is going to help, speed up a lot of things. Like how long, to do, write your scripts for your models. I think it'll help with that. But at the end of the day, it's not going to replace a geologist, particularly a good structural geologist. But they're minting fewer and fewer of those every day. Just look at Australia, they're closing geology departments. And you think of mining, you think of Canada, Australia, and enrollment levels are down, graduation levels are down, and that's not sustainable. Something's going to change there, but I don't know what it is.
It's a whole other topic of conversation, eh? Yeah. Ian, do you want to take this one home?
Well, I think everybody's covered it, but yeah, AI is just one more tool in our belt, one of these more modern tools, and we've seen a whole bunch of them, sort of come on stream the past few years, whether it's drones, portable XRF machines, new geophysics. These tend to start off at the mid tiers and the majors who perhaps can afford them better, but eventually they're filtering down to be more accessible to the juniors. But as I think as Wes pointed out, at the end of the day, it's going to be hard to convince a shareholder, I'm going to go and spend $100,000 on some AI when, at the end of the day, it's going to be a drill hole that moves the dial. that we're all after. So it's just one more tool, and I think a useful tool, along with many of the others that have come our way the past few years.
No, thank you guys. An interesting kind of diversity of topics there. I think, Brian, you had said previously that could be a whole conversation on its own. I think you're totally right. I don't have time for follow-ups, but I wish I did. Final question here, gentlemen. I'll start with Ian, Brian, Wes, Jeremy. Final thoughts, right? This is your last chance here to have a little conversation about your project. Do you want to just, as a parting thoughts about your project, what stage are you at? Catalysts that are coming down the pipeline that investors might be excited about to hear, and then where are you at in terms of just the potential impact of discovery and investor returns with your project specifically, or with your company in particular? Ian?
Okay, well, today we just announced the discovery of quite considerable 8 samples containing visible gold from one of the zones in Root and Cellar. We've been finding visible gold in boulders over the summer, but we finally located one of the sources in bedrock. There's clearly other sources. So that was really a culmination of a lot of sort of methodical but fairly low budget exploration over the summer, just going back to the markets. We had limited capital, so we just kind of put our heads down, try to understand the geology and the structure. And in this past week, that all culminated in, the visible gold was nice, but the important thing was identifying heavily mineralized structure. Those structures match the IP. There's some really nice textures in the rock supporting, the epithermal model. And so now we're geared up to start drilling a small drill program, but drilling some of these targets early September. And so that's going to be the next big catalyst, is a drill program in and around this occurrence with quite abundant visible gold.
Thank you, Ian. Brian?
Yeah, from GFG's perspective, we had a VP exploration, Anders Carlson, join us back in spring. So he's managed to get himself up to speed over the last few months. And we kick off the drill program here in early to mid-September. So for us, and I think for most everybody in this space, it's really about the drill bit. And we've had some great results come out of the Montclair project and Timmins, numerous economic intercepts at shallow depths, and we're showing some scale. We're showing it in an area that has big deposits. So twofold, you'll see us follow up on the Montclair, drilling it deeper, drilling it laterally, growing the system. I think these are pretty high probability drill holes that you'll see some really solid results. And then there's the step out across our land position where we have a pipeline of targets across 30 kilometers where we're going to start doing preliminary tests of those. Look, really exciting time for GFG. Our balance sheet's okay. We've got some good catalysts here coming out in H2 this year, and really excited as always to get back out there with the drill. And ultimately, that's really what drives value in this business.
Thank you, Brian. Wes?
We're kind of in the evaluation stage right now. We did a winter drill program. Winter is actually a preferable time for us to drill our particular project at Tower Mountain. We're considering, we're kind of doing the budget process now, evaluating our options for a drill program in the winter coming up. So that's one option. The other option is we're also considering maybe now is the time to come out with a maiden mineral resource estimate for the Tower Mountain project. There's options there. I think which option or which path we choose to take will be predicated by, kind of the world markets and what's going on in terms of the world markets. And, we don't want to do an overly dilutive financing. Our share prices has not been performing the way I wanted it to perform since I joined the company in the past year, and that's just the way it goes. So we've got to be careful with our dollars that we do have and deploy them in the most efficient way possible to drive some shareholder value in the future. So we're doing the internal kind of the wait and see for the next 4 to 6 weeks, and then we'll let people know what we're going to do.
Thank you, Wes. And final thoughts to you, Jeremy?
Yeah, so, Kiboko has completed a large 70-hole exploration program intended to verify historical results. Our team is pretty confident that that's what's that we have verified the results. That's now in discussions with our external QPs to confirm that view, and we expect to report a maiden mineral resource before the end of September. which is a major milestone for any company. We think that's going to be a really exciting time for our shareholders, because the IPO we did a year ago, the funds were all to get to that point, to go do a verification drill program and provide a maiden mineral resource. After that, we expect to start drilling probably shortly after Thanksgiving this year, so mid to late October. We're in the process now of budgeting and planning that program out, and so we think that Kiboko has really had its head down working the last year. We're going to come out with a maiden mineral resource in the Val-d'Or mining district, arguably one of the most attractive jurisdictions in Canada, if not the world. And then followed by that resource estimate will definitely allow us to put the context, provide more context to investors over what we see, how we see it, and how the exploration will unfold. And then we'll launch into a drill program sometime in mid to late October after moose hunting season comes to an end.
Excellent. Well, that is it. 3 minutes to spare here, gentlemen. I want to thank Six for putting this on. Thank you, Brian Skanderbeg, CEO of GFG Resources, Jeremy Link, CEO of Kiboko Gold, Ian Bliss, CEO of Northern Shield Resources, and Wes Hansen, CEO of Thunder Gold. Thank you, gentlemen. Matt Mickleborough of Junior Resource Investing. Thank you for your time. And yeah, thanks for listening, everybody.